Good morning or good day, wherever you are. This is our global webinar series, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, markets, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And today, it's Friday, 12th of October 2018. Welcome to Admiral Markets. We will start like every day with our disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find all information you'd like to see around Admiral Markets there. For example, also the kits, the key information documents. Just visit our webpage like admiralmarkets.com. There, of course, you will find also, if you're in the European Union, some information about the retail clients and professional clients offer. If you are in the EU since August 2018, there are 2 offers for 2 different client groups, retail clients, professional clients. The ESMA regulation is in force, so retail clients will have a maximum leverage up to 30 for Forex majors, and only professional clients, if they're eligible and apply for that, can still get a higher leverage up to 500. It's a topic of the year in the whole European Union for all CFD traders. That's why some information more. A picture shows more than 1,000 words, so 2 prominent examples, DAX 30 CFD or Euro dollar. You see the different margin requirements, 24 euro as example for DAX 30 or 600 euro for a full lot. So if you like to see more about the options for our professional clients and checking if you are eligible and how to apply for, just visit our webpage. Of course, there are some advantages for retail clients. Retail clients will get an unlimited protection against negative balances. Professional clients, by regulation, not. By some brokers, and also Admiral Markets is in that boat, have an additional protection. We call it a negative balance protection policy. Via our policy, you will get a protection up to 50,000 British pounds, what is around about 70,000 euro. Also here, check all the details out on our webpage, and here you have a specific link about that. Retail clients, professional clients, and more about that. This is me. My name is Jens. My English, made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. And like today, on Friday, it's Dirk's day. Our leading day traders live every business day, every trading day to the same time. And of course, anybody, it doesn't matter if it's retail client or professional client, will get the same great spreads and the same benefits only with us. For example, DAX 30 or also Euro dollar, triple spread of just 0.8 points or pips during main trading hours without additional commission. Also here, more details on admiralmarkets.com, for example. And if you'd like to contact us, you can call us or you send us an email or visit YouTube or Facebook. Usually all live webinars will be available as a recorded video a couple of hours later in our YouTube channel, and here you see the specific link. Thank you for listening to me, and now it's time for our day trader of today. Good morning, good day, Dirk. What's your view to the markets today?
Yes, good morning, Jens. Hopefully everybody can hear me, and we'll be transmitting my screen in a second. Here you go. And hopefully you can see the DAX chart right now. Okay. First of all, shaky moment, shaky month, October. And if you look back in history, stock market's history, October is not an easy month. If you just have a look at the October 2008 or 11 or so forth. And if you look at the current market situation, if you look at, for example, the Dow Jones or the NASDAQ, the S&P 500, or as well to have a look at our German DAX, you will be seeing that this little DAX guy lost a couple of hundreds points in a very short time. And if you look at the US markets as well, you will be seeing that they did it as well, like, for example, the Dow Jones. And if you look at the record high of the Dow Jones, which is at 26,951.81. So that's the record high of the Dow Jones. And yesterday's close has been 25,052.83. So you can see that we probably lost around 1,900 points. Okay, this morning's surge in US futures You see that the Dow Jones indicating here at 25,368 and already made a high at 25,545 is a little bit, let's say, broadly digesting that move from yesterday and coming back up. But I can tell you guys that's a high volatility and very, very dangerous if you don't know what you're doing. Looking at the DAX, first of all, of course. If you see the DAX chart here from the daily perspective, you might draw, first of all, you might draw the last high to last low here. And you might see some possible targets to the upside. But as well, don't forget that there's still room to the downside as well. If you go to the very, very long-term chart, you might search for so-called, let's say, bigger support lines, or let's say a point where we might see something like a next support. You will be seeing that there is a weekly high at around 11,431. So that's from the week of November 2015. You may question yourself, why is this guy bringing up such a long-term chart and such a, let's say, long-term targets or long-term positions? It's very, very important to see it from the swing trading perspective and from the longer-term perspective. Is there anything where the German DAX can get hold on? And if you look at 2 days at yesterday's lows, and I'm not speaking about the future DAX, I'm speaking about the XZ DAX. You will see that board, which I prepared for you. We got a yesterday's low at 11,518.56, and we got some resistances here at 11,654. That's exactly high. If you look at the chart, you will be seeing that daily chart here, and the daily high was around 11,710, and the last hours, if you look at the hourly chart, you'll be seeing that a couple of those numbers, 1165, got hit to the downside as well, so that resistance dropped again. We went down to the pivot point here, and now targeting the first support. So the downside, possibly downside target is 1147.2, and the support 2 is 11,404. Where does it come from? You all possibly know pivot points. Pivot points are as well quite easy to insert here at the Admiral Markets platform. You see that stuff here in a kind of overview, and see that Admiral pivot here. Just enter that stuff, and you will be seeing the pivot points from the daily perspective in a second. So you can see the resistance 1. You can mark it yourself on top with horizontal lines. You see that this one got almost scratched, and we went back downside. So targets, as I said, support 1 around this one here. Calculating from the future DAX quotes, 11,423.46. So first target to the downside here. Pivot point, like you see that one here, 11,558.97. Going back to that resistances, going back to that supports, and have a look to the downside here as well. We see the so-called exponential moving averages. There's a 100 moving average and a 200 EMA, and those are still, if you see that, still very much above 12,000. If you look at these numbers, 12,382, 12,464, you may also check that in the chart where we are heading to, possibly in the longer term, in the, let's say, a swing trade scenario, more to the upside in the last 2 months of the year, possibly. You will be seeing that we will still go up to let's say we started the zig and now we are going back to the zag. Let's say it like that. We get a trend line, and the trend line, I always use that. Let's say pink trend line, descending trend line. The next move up could be exactly that area where the EMA 100, 200s are hovering around. And on top of that, from the bigger Fibonacci analysis, you see that 38.2 Fibonacci retracement could be scratched as well. So there are a couple of indicators or a couple of things indicating that this move could lead to that upside. First of all, interesting for today and for the whole US and maybe European markets is that the earnings season is about to start. We got a couple of companies reporting the next days, weeks to come. So they are the biggest investment banks reporting this afternoon. We got a Citigroup, we got JP Morgan Chase, and on top Wells Fargo reporting about quarterly earnings, and it might be shaking the markets more. And if you ask me, it might be shaking the markets more to the upside back up. Could be leading to this kind of let's say a pop-up move. Very nice, because it should be an invitation to short again. All right, let's just check what is going on with a couple of stories besides that, because when you look at the velocity of that market drop, you may think yourselves, there is something brewing, there's something going on. Well, you're right. There are a couple of things which are affecting the indices, the worldwide indices, like the US markets, the leading markets, leading indices, and of course Asian and European markets like the DAX as well. It has to do something with a couple of stories like trade war, of course, but on top, let's say so-called black swans dancing around, like black swan events dancing around, like Italy, like the still not debated, 100% debated Brexit scenario. And of course, the US Treasuries are skyrocketing if you compare that to a quarter or a half year ago. If you look at Italian 10-year runners, we are hovering around 355 to 360. If you are looking at the US Treasuries, these are coming back a little bit recently, but they are still way up the road. If you look at the 10-year, which is around 3.17, and a couple of bond guys and a couple of market gurus like, let's say, Gundlach or a couple of those guys spoke about a 10-year treasury mounting up to a direction 350, 360. You might think yourselves what is going to happen with the markets if the US Treasury 10-year runner is heading into direction 350 or 360. Yes, you're right, the market will drop more. And not to forget the talk about inflation. And we are at the German DAX right now, and we are hovering about, and we are talking about German inflation right in the moment. This morning at 8 o'clock, September, consumer inflation came out. So that one is finally, published with 2.3%. You see that there is still a rate of 0.00% at the ECB. So what is happening? Your notes, your 10, 50 or 100 euro notes are really burning in your pockets because they are reducing themselves just by the fact of inflation. And it doesn't look that they will be doing something. So in the longer term, between 6 months and a couple of months to come, there's still no way to, let's say, think about other kinds of investments besides the stock market. It looks rocky. It looks like a roller coaster like now. But if you think about where do you really get some interest, where do you really get something like more than 0.01% from a bank, you might ask yourself, well, I have to enter the stock market. Maybe it is a good moment. It's getting cheaper for me, and to invest longer term. Maybe that's the fact. If you think about trading like we do, just collect pips, collect points, collect percentages every single day. Don't hold on to positions too long, because this market is going to be very shaky in the next weeks and days and weeks to come. Okay, so targets to the upside, again 11,720s, and the next one is here 11,860s. So this is the first targets for the DAX to the upside. The targets to the downside are marked here. The so-called 0% line here, which is quite the same level like the support 1 level around 11,416. So be aware that it could be shaky, and that you please don't buy into a sudden 50 to 80% 80 point dip. Just wait a little bit, like it's getting a little bit more settled, and then start into maybe with a pending order, even to start at a directly analyzed point, like we would say at 11,420s, 11,410 with a first buy scenario, and don't take a stop loss way too much to the downside. It would be leading you to the so-called drawdown scenario. Okay, looking to other markets. This morning I opened the first position at the Kiwi. Where's the Kiwi? The Kiwi. Well, I wonder myself why it's not showing up here, because I opened that one. Okay, I'm doing that again. And checking out levels from the daily perspectives, checking out the last levels, last highs, and looking at this last low here and having a target, the first target of the 66ers. That's the daily perspective. You just mark that scenario here and at the 23.6 Fibonacci here, and we'll be deleting that one here as well. And going to the 4-hour chart, going to the last high here, marking that one to the last low here, and looking for next targets to come in direction to the 61.8 level, which is around 65.90s. Doing that again, deleting that one again, and going to the 1-hour chart, doing the other way around, just to see where there are possible scenarios to step in for our next long setup. And there might be some nice entries around that 61.8. Oh, I lost the line. Where is it? 1 second. Okay. Directly marking that one and the 61.8 level. Okay. Oh, of course, that's the stop loss scenario where I went in. So you see, of course, this is the stop loss scenario for that current long setup. And if you think about the 61.8 level is maybe not 100% the best way to have the stop loss. I started that this morning. Possibly you might be using a stop loss scenario a little bit of 10 or 20 pips underneath that, or if you let's say you do it more smaller or more quicker, more faster right now, you might be placing your stop loss scenario even at the 50 or 38.2 Fibonacci here, just in case you're doing that from the scalping perspectives or from the really fast trading perspectives to try the first 1 or 2 dips. To buy that scenario. Why are we doing that? Why are we doing so-called long scenario and the Kiwi? Same stuff we could do with the Aussie the last 1 or 2 days as well. Well, if you look at commodities markets, these kind of commodities like precious metals and a couple of other softs coming back up again from recent lows, and mostly that leads to a little bit of more, let's say, relieving rates for those Pacific countries like Australia and New Zealand. And that might lead to a little bit more of relief in those currencies, and that's the only reason. That's the first buy here at the Kiwi at the first long scenario. If you're holding into currencies for a longer term, not only day trading, you might of course think about so-called swaps. So interest rates are a hot topic. You need to be prepared for that. If you're holding too long, you need to check yourself. When I'm holding, do I pay interest or do I get interest overnight? So there's information at Admiral Markets.com site. You will be getting information about the so-called swaps. And how cheap or how expensive is a swap overnight if you're, for example, holding euro-US dollar long or euro-US dollar short. If you're in euro-US dollar short, for example, you will be getting interest overnight. If you're being long, euro-US dollar long, day after day, you will be paying the interest. So, of course, euro is 0% interest, and the US is way above 2 to 5%. So that's the reason someone has to pay it, and of course it's the one who trades. This is normal. Okay, we spoke about a couple of shares. Let's say Deutsche Bank from last week. That scenario was badly unexpected. Went down to 940s, 934, 935s, so the last low. So that kind of next chance to grab these kind of stocks to try a next move up to the road first. Just saying. We spoke about silver. Interestingly, typically, as everyday traders stuff, it happens. Our position got stopped out directly around our stop loss scenario, like we did last week, and a couple of let's say hours or later on, definitely it was the right situation. It moved back up again, and as you can see, 1455ers up the road and having targets back up again. So where are targets right now? If you look at the longer term scenarios, you see if this target is coming from the low of July 2018, and if you see that in a longer term perspective, you can go way back to let's say check out the weekly. You see there is a oops, I went too far. You see there is a low at where is it? 1518, no, sorry, where was the low? Yes, it exactly was the low. I was going back to that daily chart, right? Which is the low of, Jesus Christ. There you go. The low of the 19th of July with 1517, and this might be the first target to the upside in the bigger time frame. Okay.
Yeah, the clock is ticking. That's the EU guys saying to United Kingdom, and I say now also to our webinar moderators, 15 to 20 minutes. That's we have all the time. Let's see. I wish you already now a great weekend. Tomorrow is another day, but there's weekend, so their markets are closed. The next live webinar with real-time daily trading, this is on Monday, coming Monday with Jay Medwo. We have 5 days a week, 5 different traders, so on Monday it's Jay's day. If you'd like to see and watch that again, a couple of hours later will be available on our YouTube channel, so youtube.com/AdmiralMarketsFX. Thanks to Dirk, thanks to all the participants, and yeah, hope to see you all again on Monday. Greetings from Berlin office. Bye-bye.
Yeah, you guys have a relaxing weekend. One thing I forgot, just 1 second, Jens, just one number. If you see that a couple of NASDAQ stocks like for example, Apple, Amazon, and all the stuff, you got to read these stories. How many billions, for example, Jeff Bezos from Amazon lost in a couple of hours. It's just ridiculous. It's a couple of billions in a couple of hours, and if you combine just 4 or 5 NASDAQ top tech stocks, they lost about 150 to 220 billion market cap just in 2 days, and that's maybe just one way to express how really volatile, how really crazy that kind of market situation the last 2-3 days was. Okay, hopefully you guys get a couple of good trade scenarios the next hours to come. Watch out for the earnings season, and on top of that, I wish you a perfect weekend, relaxing and sunny weekend, and hope you guys will be coming back at Friday's webinar here at 11 CET. Thank you very much. Bye-bye.